And we're live. Welcome back to the Capital Mindset Show, guys. This is another live edition on Tuesday. Today, like I said, on Tuesdays, if work allows it, definitely we can have these because Tuesdays, and if you guys were wondering why Tuesdays, it was a second runner-up for the poll that I gave you guys. And again, you guys are the main contributors to feedback as to when things will happen. So again, we have the regular scheduled Fridays, and then, of course, the Thursdays. I saw you guys were talking in the comments section about something. Someone commented something and then deleted the comment. Oh, okay. It's convinced, I guess. Okay, it's about that guy. All right. Well, that individual created. I don't know if they have the YouTube account. And you see this camera. I really need to just buy a new camera, the DSLR or something like that, because it just loses its focus too quickly. Anyways. I said to that individual that they're more than welcome to come on here and challenge me if they would like to. Let's see if they decide to do that, because again, this is an open forum for everyone to ask questions, debate me if you want to, in a more relaxed manner, obviously, because it's not pressure on you guys or anything like that. So yeah, let's kind of talk about what's going on. So I guess many of you have already seen the portfolio update video, and I'm assuming we're going to get some questions on that stuff. And again, this will be the proper forum for that to be done. And as far as kind of like what we're seeing in the market's really interesting right now. So I no one really knows, but I have a suspicion that, of course, there might be some problems caused by the price of oil and how that might affect consumers going forward. But no one really knows as to when a downturn would occur, if it is to occur. But I think it's really interesting to see what's going on and play out. Of course, we have to plan accordingly in our portfolios. And yeah, we can go with stonks. So like, you guys already know, again, I don't really like to buy a ton of different kinds of stocks all the time. I'm not really moving stuff around. Right now, I'm kind of cleaning up older positions, trying to get those out of the portfolio. Some of them are short-term, the materials such as BHP and Rio Tinto, that's having a little bit of a shift. ConocoPhillips is, again, an older position at this point. At least it's long-term capital gains and the entirety of the position at this point. Facebook, I'm very disappointed on Facebook, very saddened by Facebook. I wish that it went down. I wish that it went down more. We might still see it come. Okay, so I'm kind of holding my breath and waiting for that to happen. And yeah, we're gonna see exactly what the Federal Reserve decides to do, how they react to what's going on. We saw again the 25-point basis. We thought there was going to be a 50 basis point rate hike, but we didn't see that. So I guess the market liked that a little bit more. And again, though, I'm kind of concerned as to what if sustained higher oil prices, what they're going to do to consumption this year, which I've been getting a lot of questions, and I don't know what's the context of it. But I got at least one comment on the YouTube side regarding these travel stocks, CCL, Delta Airlines. And I assume that there's something to do with something going on presently, why I got a frequent amount of requests. Usually when I see a pattern like that, I think something's going on. I have no idea where he went. I was told by the account that they would definitely be on here to prevent bad or misinformation. And I'm waiting for them to, because I would love to have a discussion with them, just to talk here and there. I know that Strongman challenged that individual to a debate of sorts. For the time being, it appears as though that's not going to happen. I also got a comment from one of you guys. It's trying to set up a debate between me and the Brooklyn guy. Making any more videos, which is unfortunate. One of you mad lads was trying to set up a debate there. So I have no idea what we would even debate about. Okay, so going back to what we were talking about before, though. The travel stocks, right? So we saw the airlines, right, being asked about. I think Carnival Cruise Line is another one. But here's the thing with Carnival, you gotta okay, yeah, I have no idea where he is, but you have to be very careful with the Carnival Cruise Line, because with Carnival, essentially what they did to survive was they diluted the absolute living daylights out of themselves, right? And so a lot of people are attributing, and I'll probably just pull it up so we have a visual to go off of. What makes it awesome is that it's pretty easy to do. I just do this. We share screen. And it should be just like that. All right. So taking a look over here at Carnival, you see a lot of people are saying, oh, well, Carnival, it went down to here and then it's going to recover all the way back up to 49 or $50. But what they're not taking into account is the amount of share dilution, the destruction of the balance sheet, and the like. So before this ordeal happened with the pandemic and all that, there was a understanding that Carnival was the lower quality of the two. And when I mean of the two, I'm comparing Royal Caribbean, right? So we have Royal Caribbean and Carnival Cruise Lines. Carnival has a lot more brands and the like. And then Royal Caribbean, comes in and they have a really good balance sheet. You have also Norwegian. Let's not forget about Norwegian, but just put them to the side for a second. And Norwegian cruise lines, they're like the smaller player, but again, we're putting them to the side. Royal Caribbean was an interesting business compared to Carnival because the balance sheet was a little bit better. So it was kind of considered that Royal Caribbean was the safer one, and then Carnival was not necessarily not safe, but less safe. Okay. Julius, yeah, you're buying calls on Apple. I hope you guys enjoyed the meme series, or you guys are enjoying the continuation of the meme series. Definitely, there's going to be more coming and returning characters and the like. Sometimes I just have to see a scene and then I have to think about, well, what does each character in that scene represent? Does it represent an idea? Does it represent a person? And then, we just go with that. So I hope you guys are enjoying that. I hope they're funny. My wife was completely weirded out by the Target scenes. That was fun to film. And then in one of the scenes, I think it's the very first one where she's looking at Oatly. You could see there was a woman standing in the corner and she's just like staring at me, having my phone out and just like filming my wife. Obviously, she doesn't know the context. All right. What are your thoughts on NU Holdings? I know that you have reservation. I saw your question on the comment, so I'm going to have to do an analysis on it. Not all. I have the hesitation for Brazil. Yes. But not all businesses are created equal. So some are better than others, obviously. Okay. My reservations were kind of stated in the video talking about StoneCo. And StoneCo, there are very specific reasons as to why I have reservations on top of the fact. So like what I say about Brazil is you have to be even more careful when you're investing abroad, right? And I said that in that video. And I think that's what you're referring to. Hey, hello, BP. How are you doing? You like the memes. And by the way, Alex, let me know if I answered your question, but the real answer to the question is I have to look deeper and I'll make a video on Nucor. I did add it to the list. So watch out for that one. I don't know why I said Nucor, NU. Okay, so with the merger of, and I have to remember to pull up your guys' questions. With the merger of ATT and Discover coming up in the next quarter, what do you see as far as investment windows? Should we see a dip post-merger? No idea. Absolutely no idea. If you know that, let me know. Typically, what occurs, and a lot of people maybe are not understanding why there wasn't much movement, but typically when a merger is undergoing, there isn't much movement in that company because the market is still digesting it. So I'll point to some examples that you can actually look back more recently, which is United Technologies. When they merged with Raytheon, the combined business went through the same thing as the actual split pieces, which was Carrier and Otis. So if you actually look at what happened post deal, post transition, there was a time period in which the market was kind of digesting. These are all new businesses, and so you don't have immediate movement. I suspect there will be a similar situation, but that doesn't guarantee that, but a similar situation going on with Discovery and AT&T, right? AT&T will be, and I say Discovery because Discovery is merging with Time Warner, and AT&T because now will be a standalone business. So finally, AT&T will be able to focus, similar to Verizon, simply on that connectivity side of their business and not so much on having all these different businesses that they can't focus on and being good at one of them, right? AT&T goes back into the filing cabinet of perfect examples of companies that fail at empire building. They paid way too much for those assets and they misused those assets. And now here we are, right? Nice. All right. So Yeah, definitely look out for that video, Alex. I'll be sure to give it a good look. Okay. Um, well, play Twister. Well, here you go. So Netflix and Hasbro. I don't own Hasbro, but now I'm an owner of Netflix officially. And Netflix is an interesting business. It's a business I think I can wrap my head around. So it's one of those pitches I do want to actually take a swing at. And why did I add Netflix when I did? Well, I thought at that point where I bought, obviously, this is an obvious answer. I thought the valuation was appropriate. But however, it's not to its fullest size, similar to Facebook. Facebook, or I keep calling it Facebook, Meta. Meta is not at its fullest size, neither is Netflix. I hope to see that Netflix comes down. The thing with Netflix is I see that they're one of the major expanders into the emerging markets, right? And when I say emerging markets, let me rephrase what that means in this context. So specifically, with Netflix or a streaming service, I'm referring to the ability to produce customized content for each individual geography, right? A lot of Hollywood basically produced movies, films denominated in the English language. Netflix is really going out of its way more than before to kind of give each an individual jurisdiction their own piece of content, customized to the tastes, wants, desires of that jurisdiction. Because of that, I do think that Netflix does still have a lot more room to grow its business in that capacity. And if you think the world will improve to some degree in terms of its wealth, then that is a good sign for Netflix. Okay. So that's just the gist of it. There's obviously more to it than that. And then we get a little bit more complicated when we start breaking down the cash flows, what we think that they're going to be necessary to reinvest back into the business going forward, out, into the coming future, and the like. All right. Hey, how you doing, Lilix? By the way, please tell me if I am pronouncing that name correctly. I'm just doing my best when I see it. Okay, you see, that's why I'm so bullish on Facebook. The word is theirs, and as countries develop, yes, exactly. So that you can see that I'm developing that theme, right? My largest holding is Google. It has been for quite some time. Well, you see, there I go again. Google's not Google. Google's Alphabet. Okay, so with Alphabet, it's kind of like a similar story, but in a bunch of different directions. Facebook's a more concentrated play on that, and so is Netflix. But they're following the same overall global strategy, right? In terms of what I'm kind of investing, where I'm putting my money into it, right? The world I think will develop, like that's where I completely agree with Strongman on that, because that's why he's exposed to VT, among other reasons, but that's one of the reasons. And so with VT, you get exposure to the world in that sense. And the idea is the world will grow richer. Well, through these exposure to these companies, I do think that they will benefit as the world grows richer. And there's a bunch of companies, obviously, that will be like that, right? There's so many, but it depends on what strategy you're trying to implement, right? So Facebook, for example, they own, and there you go again, Facebook. Let's call them Meta. It's going to be a while before I can call them Meta, and I still call Alphabet Google. There I did it. Okay, so just Licks is fine. All right, I'll call you Licks. All right. So yeah, and here's the thing. So a lot of people feel you, JP. A lot of people feel you. Google is a very desirable business. I think there's a couple. I don't really keep track of it, but I think there's a couple super investors that might be investing into Google. Don't quote me if I'm wrong. I personally, I don't really keep up with that, because that's more of the strategy of the what's it called? Oh, I don't remember the name. I'll just say copycat, whatever Monish Pabrai coins it as, the copycat portfolio. Cloner. That's it. Cloner. So, yeah, Google is one of those businesses. Like, for example, they just print money at this rate. They just print money. Now, the valuation that you pay for it really does matter. And I'm not, I could be completely wrong, but I'm not too excited at the present moment at the current price for me to add. Yes. Oh, and Seth Klarman's buying Google. You see, there you go. Seth Klarman's buying, guys. Call options. Let's go. I'm kidding. Just kidding. And this is also very true. You see, Lix is actually telling us right here. Google was range bound for quite a long time, and even before then, it was range bound around $1,000, under $1,000 for quite a long time if you were in the market for that long. But yeah, that's pretty much That's pretty much the play. If you're thinking about Netflix, Google, all these other companies, Apple too, right? So as the world gets wealthier, Apple has more and more opportunities to expand in that capacity, where they can, again, get more and more customers because more people are making greater sums of money in terms of value terms, right? Wealth terms. Okay. Uh, let's see here. What is your take on Powell's? Okay, this is a macro question. All right. What is your take on Powell's openness to potentially aggressively raise interest rates? Yet the market has gone bullish since then. I'm confused. Shouldn't it be crashing? You see, that's the thing. A lot of nuance, and in all the macro videos, that's why when we as investors focus on a singular point, we make mistakes. The market or the economy, macro topics are like multi-layered cakes. That's how I describe it as a metaphor. So when you just talk about one layer, there's like 5 other layers, and then after you're done with 5 layers, there's like 5 more layers. Uh, that's a more fun way of explaining it. But essentially, you can think of it like this. Well, what if the market was thinking that there was going to be a 50 basis point rate hike? What if the market was wanting to the Federal Reserve to show that they're going to fight inflation? What if that was the primary risk factor? But then you see at the same time, you say that, right? And some people will say that. I'm just basically espousing some talking points. But inflation, in a lot of respect, actually contributes to the nominal price of assets rising, right? So go back to my home country, Venezuela. They had the best performing stock market in 2018, right? 200, I think it was 200 something thousand% increase in a single year, but that was in nominal bolivares. If you measured it in dollars, then it was down like 94%, right? Well, what happened during that year? Well, we had hyperinflation, right? So there's so many different aspects to really cue in on that. I'm not surprised that most of the time talking heads are going to get it wrong. And in this instance, this is kind of yet another factor that you should say, it's probably best that I don't focus too much on what the Federal Reserve is doing and simply focus on buying good quality assets. And that's about it. Okay. Regardless of where they are. Okay. Specifically thoughts on oil, specifically Canadian oil. In the future, do you think the lack of capex will lead to prolonged higher oil prices until eventually shift to another energy source? Yes, unless there is a dramatic shift in capex in the other direction. So, like I said, in every single oil video that I've done, I said that the United States and other respective Western countries that have the capacity are like sleeping dragons, right? So as soon as they can wake up, that is a risk to the oil trade. That if they wake up, right, and then they start producing a ton of oil, and it's not that simple. I'm making it sound, oh yeah, they just turn on a knob. They don't really. That's not how it works. But hypothetically speaking, in this instance, for the sake of the example, if they were to wake up and turn the production on, this is very negative for the oil trade because we are dealing with an underlying commodity that is heavily affected by supply-demand dynamics. Okay, so I think as long as capex is held back in these nations, absolutely, we will have, a questionable time frame as to when oil will come back down, and then that can worry me in the sense of consumer spending and the like. All right. So, what is the evidence that Netflix can grow faster than the competition, Disney and Disca, especially since they mostly saturated in Western markets? Okay, so right now, Disney and Discovery and the like have more room to grow because they are going off of a smaller base. Netflix has expanded in that capacity in the Western markets, right? Absolutely. So Netflix is going to figure out right now other ways to still monetize it because there's still a lot of users, like, for example, password sharing that they're probably going to come after. That's just one little example. But here's the thing. I forget the data point, and I got to actually find this data point again. But it was something to do with the research regarding how many people keep the Disney Plus after a certain period of time. And it was actually far worse than something like Netflix is. And that point alone shouldn't be like reason to be bullish on it or anything like that. But it's one of the many pieces that together kind of paint a deeper picture about the stickiness of Netflix. I think, for example, this is anecdotal, but Strongman was discussing on his live stream, that when he watches TV, it's to Netflix, right? When my wife says, "Oh, we're going to watch something," where does she go? She literally just goes to Netflix. I think I'm the one who tries to push us a little bit out to try to see what else is out there. So like we watched the new show on Amazon, Reacher, right? I enjoyed it. I thought it was like a classic action show and the like. I enjoyed that. But for the most part, the default is Netflix, right? And of course, here we go, anecdotal. We're in the Western markets and the like, all right? So I get it. But we can talk more about that if you ask me more questions, and we can get back to that. I just want to get to everyone's questions, but definitely there's more to be said. Okay. Well, first this, okay. That's a good strategy, I guess. Okay. In third world countries, Facebook can only charge pennies on the dollar for advertisement. Facebook is a dud. You see, there I go. But I know what you mean, Meta. But yeah, FB is the ticker. Not much growth from now on. The Oculus might flop like 3D TVs did. Absolutely. So 3D, that technology, right? Which Oculus I think is number one right now. And VR is still in its early stages. Who's to say they're going to be the winner? Absolutely, they might not even be the winner. That's the thing. So right now, I think of it like Western markets are cash cows for Facebook until they are able to figure out. So Facebook, of course, or Meta, there I go, will not become the largest play in my portfolio. So right now, I think, and I have this. I have it pulled up so I don't misquote myself. And I see some of you actually are on the portfolio right now. I don't know if it's anyone in the live stream. But it appears as though, yeah, Facebook is right now 5.32% of the portfolio. So it's not really that big size. And the eventual plan isn't for it to overtake Google or there I go, Alphabet. But it is to make it a decent sized position where I do think there is a possibility that Meta can expand into different avenues of business. And if my vision is correct, they're going to become very important in the B2B world. In this quote unquote internet 2.0, not what the traditional person thinks that the metaverse is going to be, right? There's like the meme version of the metaverse, what people think of. And then there's the more applicable sense of the metaverse, which I think is where Facebook is going to go. And that might be actually something going towards, not exactly, but very close towards something like a Salesforce. All right. But we'll have to wait and see. And that's the thing. I'm expecting that's the traditional business is a cash cow. And I do think in these third world countries, some of them, not all of them, but some of them are going to grow in prosperity, and Facebook can still profit from it. Not something to move the needle, of course, because we're looking at United States. They're banned from the number 2, right? They can't get into China, and that's a big problem. If that were to ever change, if China were to actually liberalize, maybe, but even then, Chinese people are already used to, if you go or you talk to Chinese people, they're used to their own forms of social media. It's only when they're in the West might they use some of these Western social media sites, right? I find it more probable that people who already have Netflix might also get Disney or Discovery for children, if nothing else. Yes, no. Okay, that's precisely the case. I think that there will be many winners. There's not going to be just Netflix, and I hope I'm not actually saying that, or you guys are understanding that from me. Netflix will be, I think, one of the, if not the winner of this as overall, right? It's not going to be the only winner. There's going to be other winners. So like Disney, I absolutely think is going to be a large player. And I think Discovery/HBO is going to be the other large player. So it's going to be, those are going to be the top 3 if I had to make a bet on that. All right. By the way, back in circa 2005 or around those years, Mike Stathis recommended Netflix stock over Blockbuster. Total pro call. Okay. Is getting ready for some. Oh gosh. Bangkok. Okay. Zacks ranks. Okay, so this one, Zacks ranks Netflix's sale. So, Fernando, are you saying? Let me be very clear. You're saying that Zacks ranks Netflix as a sell. A lot of Zacks ranks are actually more kind of like momentum in some ways. All right. So they're not. I mean, you could look at them and kind of see what different sites say. Of course, I don't know. Like if that's the strategy, right? Okay, so again, BP, I'm going to treat you just as equally as all my other subscribers. So don't worry, this is a safe space for you here. I got answer to the question, Fabio. Disney has garbage, diversity, higher content. I agree with that. I agree with that. Like Disney was saved by what's his name? Oh, I call him Baloney because I forget his name. I'm unfortunate. But also they destroy. Yeah, you see, I was about to say that. Yeah, there you go. Star Wars. Okay, we agree on that, right? Marvel movies, they're kind of like more the same, but the thing is that they're so consumable. Marvel movies are so consumable. So as a business, it's great. As a fan fan of Marvel, you might not like it that much, but you know, I don't know. There's a lot. The Marvel fan base has grown so much. It's those hardcore fans are nowhere near like the size they were, or the percentage of the size they were of the total base. Okay, but all right. So let's I guess let's continue. Let me see what else. And just so everyone understands, or anyone who doesn't know, I did switch out Tencent for Prosus, and I have sold Foot Locker. Just in case you guys haven't seen the portfolio update video, for me it doesn't matter either way. If you guys are hanging out here and you get the information here, or you watch that video. Also, for the most part, all of you guys said I'm liberated of Corsair Gaming, if I so desire. Oh, really? Okay, so I haven't heard anyone say this yet, but Curry streaming, I would love to know what specifically do you like it? How does it compare to Discover, right? Or Discovery, sorry, Discovery Channel, and it's, or like this History Channel and stuff like that. Do you like it more? Do you like it less? Have you not consumed the other, only Curie? And how did you obtain Curie? Did you obtain Curie through your work? Because I know they do offer that through some benefits packages. So I would be curious to note that. Or are you just a subscriber that subscribed to it because the value proposition for you is very good? Because I think they're very cheap. I think they're like $1 a month, something like that. What sectors are you most bullish on for the next 5 years? Okay, so let's distinguish sectors in terms of stocks and sectors as businesses, because those are very different, because it depends on what I'm paying for it, right? But sectors as a business I'm very bullish for is anything regarding data as a whole. And I'm talking about the sector, not an individual business. Definitely also semiconductors, fairly cop out there. I'm basically copping out with both of these because these are the obvious ones. And depending on how things turn out, some commodity plays regarding rare earth metals specifically, not so much like oil for the long haul, because I do think there will be some form of demand destruction in some capacity in the West, not so much in the third world, because the third world still has to develop some things, right? But there'll always be that demand. Okay. But yeah, definitely over the next 5, and actually, no, your question was 5 years. My brain just short circuited there, and I gave you answers for different time frames. But no, for the next 5 years, definitely anything with data, anything with big data, and that's already reflective in my portfolio. With for example, Alphabet. There are plenty of actual plays in the data space. You just have to really break down and understand their businesses. Cybersecurity also is another one. It's just, again, separating the business sector from the stock. A lot of cybersecurity stocks are really expensive. The only one that I spoke about was Checkpoint. I think Checkpoint was the only one during that time period, because we had the liquidity crunch in the market. And the video, of course, it's still up. Yeah, it's at 139 now. It was the one that was actually the best valued at the time, and it's not up like crazy amounts though, so don't like, but it is up while the other ones kind of came back down. But they're obviously on the business side. That's a good example of like separating the stock from the business. On the business side, they're not doing as well as something like Counter-Strike or other competitors like Fortinet, stuff like that. But the stock was at such a low value that we didn't see bad performance. Okay. Okay. So yes, they have increased their share buybacks for the VIEs. Yes, the coddling. So no. So the HK shares and the shares here in the United States, they're all part of the VIE. So if it's affecting one, it's affecting the other. And I think that's going to So I'm pretty sure it is 25 billion. Yep, 25 billion. All right, 25 billion. Okay, and let's go back to the stream. All right, so Prosus and Tencent is not the same. Fernando. Okay, so I'll just answer this question, I guess, in the best way I think possible. So Prosus and Tencent, they're not the same thing like directly, but one is a holding company of another and a bunch of other assets. So Prosus owns a bunch of, speculative internet finance stocks in their portfolio, or companies, not stocks, companies. And they also own a absolute asinine amount of Tencent under the business. And so again, part of the thesis kind of underlies the coddling of the Chinese VIEs would have an outsized effect on foreign holding companies, of which Prosus is one of them. And if I'm right, then the gap, the NAV gap, would probably close up a little bit. So not only will I get an asset that should follow Tencent to some degree, albeit at a discounted rate. And by the way, there should always be a discount on a holding company for the variety of reasons, one of them being taxation and stuff. But net asset value, that gap, it might close. There's nothing to say that it can get smaller. It will exist, but it could get smaller. So I could benefit from, again, the underlying asset appreciating, and then also the gap closing a little bit as well. Okay. All right. So let's now I have a question for you, BP. So what do you mean? Because we can't just say throw me a stock. So you throw me like, a company that makes some equipment for the military and, like tasers and stuff like that. But what do you mean, like specifically surrounding this business? All right, BP, Talk Pro. Oh, I love nature and it just interests me less I connect to movies. Okay, that's really interesting. So Curiosity Stream is basically providing you that direct documentary series on different topics that cater to you. Okay, are you saying that they are more? And this was like this follow-up question: are they better than something like Discovery, National Geographic, something like that? The Discovery brands that they have. Also, I think National Geographic is owned by Disney, but you get what I mean. Those competitors. Okay, so so Palantir. Well, Palantir, I've had a little bit of a pass with Palantir, for you guys already know, and I guess I don't know if you're referencing that to maybe the comments I made on what I think is bullish in terms of a sector. Palantir is obviously part of that. The thing is, a lot of people don't understand Palantir's business model. At least that is one of my opinions. And the thing with Palantir is it is a hype stock. Let's not kid ourselves. It very much is a hype stock. There's a lot of retail money that's buying into the story, right? And the story is a good story. The technology is fascinating. It's unique. But, and again, I said this in the Palantir video in the risks section, there are some concerning players coming into the space. Of course, at the present moment, there isn't really a competitor. And I think there's some creators that do a decent job at actually explaining the business model in terms of how slow sometimes it is for them to ramp up contracts and the like, and how that really takes place in terms of how they get new business each and every time. But again, Palantir, for the most part, I would say for most people, it's a very difficult business to understand, which means that it might not be the best play, because then you don't know when the business is doing really great or when it's doing really bad unless the market tells you, which is a bit of a problem. All right. Okay, so all right. You think the reopen plays out at all, or does higher oil hamper demand? Okay, so that's the problem, right? Higher oil, sustained higher oil can make a bit of a problem. Okay, so there's a bit of a problem if we have sustained higher oil prices. Okay, because think of it like this: people have to spend money on a couple things, right? They have to spend money on housing, on energy, and on food, right? And that's why. And that's not the main reason, but that's why sometimes we look at those three and we're very concerned if the prices of those three are rising too high, because those are the necessities, right? Maslow's hierarchy of needs. Remember that thing from your classes or whatever? And if people are having to pay higher prices for food, housing, and energy, then they're going to spend less on, maybe going to the theme park. They're not going to go out to that restaurant as much as before. They're not going to go on that cruise. They're not going to go on that vacation. And this has a trickling effect across the economy. So if it's when it rises too quickly and it can cause like a shock. And then we get into the whole psychology aspect of it, because if people are really trying to then save money, right? Or they're trying to say, okay, I need to save up money because prices are going to go up even higher. Or that's one scenario. And then some people might say, well, people are going to be more incentivized to spend money, and then causing more inflation, right? In other capacities, right? Because they'll say, I have to stock up on things, right? So there's so many different ways in which society itself can behave. But this is, again, yes, it is a concern to me, because I think that those things, the non-necessities, are the ones to suffer the most when the consumer is getting hit hard on that end with the necessities. Okay. Yes, index investing with Cole, argument from authority. Absolutely. You know me. That's a good comment, though. All right. So when I looked at Prosus, one of the reasons I never pulled the trigger was this stock has been undervalued. Yes. So there will always, but there will always be a discount to NAV. There will always be one. So don't invest in it thinking you're going to get a realization of the discount. They'll try everything they can to do that. And the management has stated as such that is their intention. However, they're never really going to be able to achieve it fully. Okay. So, yeah, that's pretty much the thing. You will not see the full realization of NAV, but you'll see perhaps a decline in the discount. All right, we see this a lot with holding companies, right? We see this in Porsche holding company, right? They just hold Volkswagen stock, and there's always a discount to NAV. There was a discount in Dell, which was a play, by the way. I haven't spoken about Dell, but it's a good case study. I had purchased Dell way back when, before the pandemic and all that. And the thesis around Dell was their holdings in VMware. And you guys might not know what a VMware is, but the point is, VMware, the holdings of VMware were more valuable than all of Dell, which was incredible. So I was basically getting the boring Dell business for free, and making a play that they would one day spin it off. Hindsight, they did do that, and it turned out really well. Okay. And it was a really good play. All right. But not all the time will there be a realization. Now, like, let's say if, Prosus spins it out in some capacity directly. Yeah, that could be a way to realize NAV. But will they do that? I don't think so. All right. Okay, so I mean the potential for gains on Axon stock. So Axon stock is the stock that he asked before. Look into it. Maybe a good video for you in the future. I still think you should promote index investing instead of single stock picking, though. Okay, so I'll look into Axon. I'll write that down. And as far as the secondary comment, no, absolutely, of course. The thing is, there's other creators that I'm kind of teamed up with, I guess. Right here, there's one, Index Investing with Cole, which, by the way, subscribe to his channel. He's actually a really funny guy, by the way. You guys should see him in the live streams. He can crack people up really well. And he's very quick. Okay, he's very quick on his feet. All right, so I'll look in next. I'll make a video about it. And so I kind of just talk about individual stocks and then just show what I'm invested in. And the goal is to shed some light, because I know YouTube, there's a lot of stuff on YouTube, and I'm just hoping to share my perspective on different names. A lot of the stocks that I talk about are not even stocks I'm buying. They're quite literally not even stocks I'm buying. In that capacity, I think the grand majority, right? So a lot of people have YouTube channels dedicated to talking about stocks that they are buying, which has a whole host of implications as far as the ability for them to remain non-biased and such. All right. Is that the Amit guy pumps YouTubers, by the way, guys. All right, so let's see here. Yep, that would be the idea. And what's your thoughts on uranium, Fabio? Are you bullish? Okay, so this question has been asked me a couple times in the past. Uranium is one of the ones one of the commodities that for me is in the too hard bucket. Too hard for me. I will refrain from giving you my expressed opinion. However, I'll say this. All right. And then I say that first, so you take what I say next with a grain of salt. I think that my mind says, perhaps, depending on what occurs in this war, uranium will be a better or worse investment depending on the instability of that region. A little bit of a broad-based cop-out answer, I know, but that's the best I can really do because I'm not entirely too certain. People try to make inflation way too complicated. Yeah, you know how also makes inflation complicated? The Federal Reserve, right? Sometimes, you see, this is what I'm talking about. He's funny, all right? All right, so, okay, what company do you think will have a major role in rebuilding Ukraine after the war? No idea. I didn't know there was if there are companies in that region that are basically construction companies. Yeah, sure, maybe. But the thing is, we have to consider the destruction, the economic destruction to Ukraine's economy. Will they be able to afford? Will the West fund it? You know, these are all questions, right? And then, we have broken window fallacy that you can kind of profit from it. You know, there's a broken window, Ukraine, and then we can profit from the broken window that is Ukraine on the rebuilding side. All right. Netflix was a really hyped stock in its time. I see no problem with Palantir being hyped. The issue is if they can deliver the growth and cash flow. Can they? Your opinion. Okay, as of now, I think the business of Palantir will flourish for the time being. That's what I see. Okay, so Palantir, my only concern is I would love it for this hype, right, to turn into fear, right? And that could happen if we enter a real deep bear market, because we can see that still there were some, you know, what we call diamond hands, right? A lot of people might have panicked, and that was probably the drawdown we saw in Palantir, which was one of my concerns as to why I liquidated the position. And again, for everyone who doesn't understand the context, I have a video where you guys can go check that out. Again, it's public, you know, just go see it. And it's talking about Palantir when I sold and stuff. But regarding Palantir's business, I think for now, there isn't really anything exactly like it, right? And I think I'd be more concerned holding Snowflake than something like Palantir. Netflix, in its time, it was a hyped stock. Yes, but there was a lot more. I think there was a lot more clarity, and I think it's obvious to say that in hindsight, but you know, I'm saying this right now with Palantir. For the time being, I think there's a lot of clarity in terms of where the business will go. They are scaling, and I kind of showcased that in the interview video where I did one with one of you guys as a subscriber, and I showcased a bunch of companies. One of them was Palantir, and I showcased why Palantir is showing signs of scaling, and that's very important. Netflix showed the same things. You got to be careful with companies that are not showing scale. Then secondarily, you want to be careful what the prices that you're paying for it. What are the assumptions that it's pushing into the future? If the assumptions are a little bit too aggressive, you know, that can be a little bit concerning because obviously it's priced in. And then it matters on, it severely matters on how quickly or well they can execute. And okay, so this is addressed to someone else, but you know, some of these points, it's see, the thing is, I don't really get myself involved too much in stuff like that. I just pretty much do what I do. And if those things could all be true, by the way, all the things that you're stating here, that's not to say that this is false. It's just that there's no way for me to know and then directly say, yeah, this is absolutely true. And mainly, that's not the content focus of this channel. It's strictly mainly on that. You know, I might put it in like a meme, but like, you know, that's as far as I'll go. I won't have like a direct video, like, you know, saying, I'll leave that to other creators. Okay. I will definitely, don't worry, Caesar. That video I'm going to make it this week, the Joseph Carlson video, because I know you asked for that one. No, I have not. My work schedule has been absolutely insane. Tell you what, I'll look at it after this call. I'll look at it tonight. I know that I told you that I was, and I need to get on that because I have it written down here, the Lawrence Summers article, and I need to get that out for you. Of course, because I said that I would. All right, so I have to actually do that. I apologize, Andrew, because I know you did ask that a while ago. That's also true. If an occupation happens for a long period of time, I don't know if that's a possibility, just saying, but if it does, then, you know, probably is going to be a Russian company. I don't know. All right. And by the way, there's something both of you can agree on, because I think, Julius, you did comment that in a previous video. I don't know I think it was on Strongman's live stream. So You guys can agree on there at least. You see it coming together. This live stream's already bringing people together. All right. Think to invest. Why is that name familiar? Think to invest. Think to invest. Think to invest. That's a YouTube channel, isn't it? Think to invest. I'll write that down. I don't know why I don't know. Think to invest. Think to invest. I've heard of learn to invest. Think to invest. Anyways. Okay. What is the most interesting country to invest in your opinion, excluding the United States? No, I'm kidding. Don't worry. Okay. So obviously, if you can participate directly, excluding some of the political risks, if you were somehow able to do it, China, but outside of that, India. But the thing is, once you get into Southeast Asia, you got to start including China, by the way, including China, but all of Asia in that capacity, you got to be very careful with corruption. Corruption, it's a problem. Japan would be interesting if they can get their demographics back in order. That would be nice because I like Japan as a country. I really do. I really want to go visit for a prolonged period of time. One of my wife's childhood friends, not childhood friends. Well, she wasn't a child, but she was a high school, college. She made a very good friend who's Japanese, and so we need to go visit her. Well, actually, right now she lives in Hong Kong, but when she goes back to Tokyo, we need to visit her. Okay, so wait, did I answer that question? I don't want to be a politician ever. So if I don't answer a question, by the way, and I accidentally skip over your question, say it again. Don't let me get away with it, because this is what these are for. These are for you guys to confront me with questions live. And I think I said, okay, so India, Southeast Asia, if I can be careful with corruption somehow. If the war ends and there's some semblance of stability that occurs, Russia would definitely be very interesting immediately right off the bat on that rebuilding process, on that opening. But we have to see things normalize. Maybe a political change going on in Russia could be something that's very bullish longer term. I already have some exposure. Again, it's there's no shame in seeing it. Gazprom's in the portfolio. So if peace occurs, I do think I will see a recovery in that. All right. Bullish on Euro and Asia stocks over the next year, or just US-based companies have the best outlook? I know China is a big question mark. Same with the war, but those aside. Okay, so at all on Euro or Asia stocks? Okay, European stocks, I have some exposure to Europe indirectly. So not indirectly, directly because it's my wife, but Unilever, LVMH. LVMH is the one I would love to own myself. Oh my gosh, at the right price, I would love to own that. Well, LVMH, these are global companies. Like, they're European companies, but they're global. And then I guess technically Prosus trades on the Dutch stock market, so in Amsterdam. So I guess technically, but you're talking about, I guess, European specific or like European traded. I need to know that. All the ones on the watch list. Actually, it doesn't even include all of them. But I'm also looking at, in terms of non-profitable businesses right now, I'm looking at Splunk. Again, this is adding to the ones on the watch list that are perhaps not there. And I'm highlighting, maybe I'll highlight Salesforce. I'm definitely looking at Salesforce. Leggett & Platt. Leggett & Platt I'm looking at. Yeah, Microsoft's always going to be looked at. Apple's always going to be looked at. If the right price comes, those are always going to be watched like a hawk. Hopefully that they ever come down at a good price. But yeah, just take a look at the watch list. It should be another sheet on the public portfolio. I need to add more to it. It eventually will show all of them. But yeah, I just need to take a day off and then just list them all out there. Okay. Okay, most YouTube channels are hype and pump channels. It's easier to find the good ones and ignore the trash. I don't know if that was directed towards me. But yes, I agree. How do you value a holding company like Berkshire? I go through each holding, do a DCF on each company, and weigh it against the allocation. Is there an easier way? Okay, the thing was, you're using a DCF for a business that is not actually acquiring those cash flows. on their end, they're evaluating it like that. But the thing is, yeah, you're looking at a holding company. So with the holding company, it's a little bit more nuanced than that. Like, of course, you can evaluate the directly owned businesses. You could evaluate those, but not the holdings like that. You shouldn't be doing it for those. So like okay, there's so many questions I have for this specific comment, right? So here's some questions, and maybe you can list them out later. But the questions I'd have for you are: when you're doing this analysis, are you doing a DCF? And let me read this again, maybe because you do say that. I go through each holding, do a DCF on each company. Oh, okay. Well, the cash flows generated by each business and then realized by said business, which is the holding company, I'd be a little bit cautious on doing that, because you're technically like a little bit removed from it because you're in the holding company. A lot of times, for example, people look at book value. Book value is sometimes a good metric to look at as well. But the DCF would be more appropriate to use on the wholly owned businesses like Geico. If they, I haven't looked at Berkshire in a while, but off the top of my head, I don't know if they give you or disclose that information. Their energy businesses, their railroad businesses, all these other businesses, you can do it for those and then come back. So yes. JP, which he's in the comments. You read his comments. Who's that directed to? Oh, I don't know if that's, I don't know. Sometimes if comments are directed towards me or someone else. So it's difficult for me because my brain's going to the next one and the next one and the next one. This channel is more, oh, thank you. You see that? I think that is a compliment, because that's back, for those of you guys who don't know, my background before all this in university, I had a tutoring business. So I always had a passion after, I didn't know after high school that I would have a passion for teaching people. And it was always really fun. I always got to meet new people. I mainly tutored in STEM subjects and tutored across various different subjects and levels. Okay, so I do enjoy doing that. Okay, so, well, Fabio, Tom has appeared on your streams with Strongman. You guys need to ask him if he shows up again. Mike Stathis is willing to pay him $10K if Nash can prove he was a Wall Street analyst. Okay, well, see, should I don't know how to be diplomatic. Well, I'm trying to be diplomatic because, like, I'm trying to say that I sympathize with a lot of this. And again, like I did say in Strongman's channel, I am Mike Stathis' biggest fan. I'm just kidding. But no, in all seriousness, I mean, I guess I could bring it up. I'll bring it up if the opportunity arises. I'll be fair in that capacity. Again, because I see you and Julius agree on that point. Again, something that I just don't comment on because that's not the dedication of this channel, and simply because I don't know. So who am I to know? I'll let others kind of do that. The goal is, and I got this criticism, and I take criticism. I think I take criticism well. So I took a criticism a while ago that was to allow, and I think it was one of you. I won't call you out. Don't worry. But I think it was one of you who said that I should trust in the intelligence of my audience to know when someone is, bad, giving bad information. And I thought about that, and I was like, you know what? Yes. And then in the subtlety of ways, I can say certain things about other creators in a subtle way, but not in an overt way. And then I will leave that to others, and then or save that for different forums. So when I'm on Strongman's channel, I'll be a little more open. If someone were to ask me on this channel, I'll be a little bit more subtle about it. Okay. Well, actually, it's an API that was designed to fit into the model, and I access it. I access it through Google Sheets. Very complicated, but no, it actually gets it from the SEC. So just sometimes it's weird, and I have to work with it, and sometimes I have to fix things and stuff like that. But yeah, it actually gets it from the SEC. Okay. By the way, there's a lot of APIs that people could pay for, but a lot of them are really bad. Ugh, they're like really bad. They make like really bad mistakes. But yeah. Okay. Thanks for the answer. No worries, man. BP. Okay, that's not directed towards me. What do you think about Everything Money's channel? Are they not too conservative? Okay, no, there's a lot to be said about Everything Money's channel. There's a lot to be said. Again, I'll be diplomatic. I think personally, personal opinion, okay, not to attack, that there are a lot of nuances that channel misses, and it's not a problem. It's not a big deal. They're not trying to sell courses or anything like that. So that, or like, courses where they clearly don't know what they're doing. So I'm not going to say that, right? But there's a lot of things that they miss in terms of nuance. And I noticed that a lot when I got the subscriber request to review Paul's portfolio. And it seems to me that that lack of understanding on these nuances is showing up in the portfolio, in the execution of the portfolio. So over long periods of time, I do suspect, and I think the subscriber did say that at one point he said in the last 10 years he's underperformed, to his own admission. But that's, of course, that's past performance, is not indicative of future performance in any capacity, whether or not you did really good or really bad. But I think that for the longer term, I don't see him outperforming. Again, because of those issues. But I can get more specific if I do a video, and again, I'll be less diplomatic if you catch me on another channel. I don't know if that's true, but I think it's funny. All right. Yes, no, 69.69. That's the buy price for LVMH. I really want to own LVMH. Every time we talk about it, Julius Caesar, I get so irked up because I really just want to own that business. Oh, such a beautiful business, man. Such a beautiful business. And they're so powerful too. You know how well connected they are in France? That company is insane. All right. Oh, did you already address? Yes, I did, but very briefly. I can go actually a little bit deeper, but yes, Alibaba increased their share buybacks to about 25 billion. And so this is not executed all at once. It's going to be executed over periods of time. So when we take into account the totality of the share buybacks relative to dilution, it does still appear that they are net negative diluters. Okay. Again, everything I've ever said about the VIEs can change on the dime should we see a sense of regime change within China, a sense of different focus. Because right now, and this I've addressed in many, many videos already, I see that when they're backed into a corner and they're like, it's either me or you, they're going to choose themselves every single time. And then again, when there's institutions that are much larger than us that are participating in these investments, and again, we discussed SoftBank and Yahoo, those entities, right, much larger, much more well-connected, were basically rug pulled. What do you think would happen to us, right, in that capacity? Of course. I'm oversimplifying the argument there. We went a little bit more deeper in those other videos, but yes. I have I don't know what licks. I don't know what that means. Again, my brain, because I'm going through comment to comment to comment. Is that context for a previous comment that we made together? Let me know. Sometimes I need more context. Oh, well, have a safe flight, Paolo. I hope you hear this before you get on there, because I know you commented that a couple minutes ago. So have a safe flight. Thank you for coming on here while you did. Okay. Definitely have seen those, by the way. All right. Think to invest, Fabio. You said you thought the name was familiar. It's because he's somebody in the chat here. Oh, okay. That's why. It's not a channel. It's a subscriber. Oh, there you are. Think to invest. All right. Yes. Okay. That makes so much more sense. You see, my brain sometimes just doesn't connect, guys. Doesn't connect. And I'm coming after work. So, all right. I see some really good ones coming up here. Hey, Spencer, thank you. Really appreciate it. Okay. I really appreciate all you guys when you guys say kind words, also the negative words. I've had some subscribers who are now longtime subscribers that at first had negative words to say, but that's okay. Everyone is welcome here. Right. Unless you don't want to be, no one's holding you here either. All right. So what is your thesis on Thor? I saw you added it to your portfolio. Analysts are kind of bearish on it. Sorry, can't read. With declining projections. Was it purely a value play? Okay, so here's the gist of it. Okay, it deserves its own video. Thor did benefit tremendously from the pandemic era. Okay, now here's the thing. I have already placed that should we see a drop in consumer spending, obviously Thor is going to suffer. Right. I have plays that will benefit from that capacity. Right. I've already benefited from this, from the sense that we have seen oil prices rise. Right. So I benefited from that. And right now, I'm looking to exit some of these positions. So I still have other counter-cyclical plays, but Thor is my play in the sense that should those fears not come to fruition, this business will be there to also benefit in that capacity. Of course, not to the same extent, right? So there are obviously going to be some players that are better. I'll name some of them off the top of my head. Obviously, some of the airlines, some of them, and some of the cruise lines, because those are the ones that are like the worst, right? In terms of, if things don't turn out that bad in terms of consumer spending, those would benefit even more. Thor is, again, for those of you who don't know what Thor is, Thor Industries, they are the largest manufacturer of RVs and trailers, right? For camping, for the camping lifestyle. So right, and by the way, throughout this time period, a lot of people who weren't introduced to that lifestyle were introduced to it. And now you have a bunch of people who before weren't even thinking about it, but now are considering it. So the customer base is expanding. It's already a small market. I mean, Thor Industries, let me actually pull up the market cap, because I don't want to misquote the market cap, but it's exactly $4.8 billion, right? And it's the largest player, right? This is a small sector overall, right? This is not a mass-wide consumer. So we don't need much to move the needle in a positive direction in terms of consumer adoption. And at the present moment, I think that everyone else is already pricing in the declines, right? So we see that again with analyst projections, et cetera. And should it not be the case, I'm more than comfortable with adding it in, because also not only that, it's a very well-run business. And I'll address those in the dedicated video. Okay, so this is a good question. This is a very good question. How do you exit a stock? Okay, everyone's going to have their own perspective on this, right? Their own way of doing it. But how I exit a stock is purely based on my feelings around it regarding the valuation, regarding if I agree or not with the management. So I exited Intel, right? Not based on valuation. This is an example, but I exited based on the decision of the management that I disagreed with. I disagreed with them. I sold it. And there's a video where I say I'm selling Intel. It's still on the channel. But to rehash these points, I sold it simply because I disagreed with how Intel was acquiring the capital or the funds to do so, not because, I ran it through the model and said, oh, it's overvalued, but mainly because of that disagreement. And then I feel like that is a good reason to sell. That's one. And then again, what happens if the valuations get to a point where you're not very comfortable with the future assumptions of the business, right? Of the business performance? That's another reason to sell. And then again, you have to figure out when you are comfortable with holding a business, right? You shouldn't hold anything that you're not comfortable with holding. Of course, like for example, if we take this point and we turn it on itself, index investing removes that, right? It removes that sense of emotion, that sense of psychology, to the point where you as an investor simply follow the strategy that Jack Bogle laid out, which is dollar cost average in over long periods of time. And the point of that is removing emotion, removing that emotional aspect, right? So no matter what happens, exiting a stock should never be an emotional game. I don't do it based off of, my sense of morality, my sense of fear of what's going on. Simply is, if management does something I disagree with, or if the price gets to a point where I reanalyze it and the future assumptions are just way out of what I could possibly understand, it immediately goes into I don't understand, and I'm going to exit out. Now, when it gets to a point where it's like fairly valued, I don't like to touch the soap. Like, for example, would I necessarily buy Alphabet right now? Not really, but I'm not going to sell it, right? For a couple of reasons. I don't want to play with the soap there. I don't want to pay the taxes. That's another reason. So that's a good motivator. And yeah, that's pretty much it. All right. So more insights on LVMH, of course. So LVMH, let's talk about the brands that they own. They own Sephora. They own Louis Vuitton, Hennessy. They bought Tiffany's. They own a bunch of champagnes. Basically, think luxury, they own it, right? Luxury, they own it. And the thing with LVMH is it's a business that will do well no matter what, because it's in that category where it targets a consumer base that doesn't necessarily get affected by sharp downturns, right? Something really has to be bad for LVMH. And there's something that's aspirational. They're the aspirational purchase within most consumers. So, for example, right, you have $1,000 handbag, right? You have the regular woman's purse, and then you have their purse. Okay, so their purse is an aspirational purchase. You would probably skimp out on a regular old purchase, right? You might not go for the $300 purse. You'll go for, like maybe the 100 or below purse, right? But those people who are looking at these products as sort of like a status symbol. I'm not saying I agree or disagree with that, by the way. That's what we feel about it being a status symbol is irrelevant, right? What matters is what the consumer feels is a status symbol, right? So a lot of women, a lot of even men feel like these brands are status symbols. And of course, we can talk about the quality of being really good and all that, but blah, 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 blah. Let's face it, a lot of people get it for the status symbol. And they purchase those products as aspirational purchases. So if downturn happens, do their aspirations go away necessarily? No, not really. So maybe they skimp out on not purchasing that medium tier item and they go for a lower tier item, but those aspirational sales don't go away as strongly as that medium tier. So that's a little bit more. All right. Okay, so if you love LVMH, sell puts against it. Yeah, of course. No. I thought about that already too. You know what? That's a question I don't have an answer to. Like, why not? Why am I not doing that? You know what? I'm going to take a look at it tomorrow when the market opens and see if, it, because here's the thing. It's not every single stock that I would like to do that in. It has to make sense. The premiums have to make sense. So it's not just simply, oh, I want it, therefore I'm going to sell puts. That's like how, if going back to that everything money question, I feel like when they express that idea of selling puts, they make it sound so easy. Oh, you just sell puts. You just sell puts, right? And it just works out. No, not necessarily. And you got to be careful with that. Everything you got to be careful with. In the options market, you got to be very careful, guys. Because like, for example, with Facebook, I think he got executed at 250 and he had the puts, right? He made that passive income temporarily, and then he would have just been better off holding off and just waiting, right? You can actually mess yourself up in that capacity, all right? Hey, no worries, Armando. All right, what do you think about the recent pumps? I'm seeing a lot of recession doom and gloom from other channels like Meet Kevin. Do you think they're overreacting? They're probably overreacting, but like we might actually see one, right? We might actually see a recession. We are seeing, let me tell you this. So the yield curve isn't currently inverting. It's in the process of inverting. And if it does so for a prolonged period of time, it has a 100% accuracy of not following, but preceding a recession. Recession usually leads to that, right? That's not the cause. It's more like an indicator. Okay. And sure, we don't know how hard it will be though. There could be a small recession. There could be a big recession, right? We don't know the extent. However, I've discussed it in separate ways, and you won't see like dedicated. I sometimes make fun of this concept, and you see that in the titles when I say like blah, blah, clickbait title, blah, blah, or like blah, blah, recession, blah, blah. I make fun of that because I could not stoop low. I don't blame them for doing it. It gets more clicks. And they're running businesses here. But I could stoop to that. And I want to rephrase from you. I won't use that word, not stoop, but I could do that and probably get more clicks on videos. But the thing is, I'm not really focused on that, on delivering that kind of content. I will discuss it occasionally when I do macro level videos. But yeah, answer your question, summarize it. Overreacting, maybe. Are we not going to have a recession? I think we might. I think most likely we will. And you see, there you go. I think Julius Caesar puts it out perfectly. They're kind of selling more fear because fear gets a lot of clicks. Okay, I've seen titles saying like you're going to starve, like titles like that, and it's like okay, but a lot of people are going to click on that. But it's kind of like okay, there, come on. I'll tell you this: being from Venezuela, I mean, luckily, I didn't really like myself personally go through the horrendous situation that occurred. I have family members, and I remember what was going on at the time. There's got to be a lot to go wrong in order for that to occur. We are a breadbasket nation, by the way. So, all right. How did you come up with the growth rate for Shopify? They're clearly taking market share and they have a long way to go. I commented on your Shopify video with but more information too. Okay. So the growth rates for Shopify were given by a range. So some of them you might think were really low because I assumed that something could occur, right? In a worst case scenario that comes in and takes market share away from them, right? Now you have a lot of good points there, and I was hoping to, and you know, clearly there are moments where I don't express certain ideas well enough, but I was saying that Shopify is like no other at the present moment. Like Squarespace is nothing like Shopify. Shopify, let's just face it, it's its own, it's doing its own thing, right? And it's basically has a right to win in its niche category, which is providing a space for entrepreneurs to host websites, host stores, and sell in e-commerce, right? It's fantastic at it. It's the best by far. It's by far the best. So they can continue to grow, and I think they will grow faster and faster and faster as long as no one else can come in, and as long as they don't rest on their laurels, as long as they don't start being overpriced when compared to a competitor that maybe offers something more direct. I think, for example, Meta could be a serious competitor. I discussed Amazon, but the thing is, Amazon, and this was a thing back when I was invested in Shopify, was Amazon's going to come in and kill Shopify. Well, that didn't happen. And at the time, what was obvious that it wasn't happening, and I think Amazon was trying to push their own version of it, or they were trying to do something against Shopify. I remember that was the concern back in the day, like 2017, 2016. They failed because, again, Shopify, just because you're bigger doesn't mean you're going to win. Okay. Again, don't let me get away if I don't answer a question. I just want to get through some of these, but definitely if I didn't answer a question, say, hey, you didn't answer my question. After the Boeing accident, what will happen to the actions? Wait. Forgot to go over this one. I can't do it. You know, my wife thought it was a dolphin noise the whole time when she would hear, you know, other people's channels saying that noise. Thought it was a dolphin noise. Let me know if you guys can hear a dolphin when that's being done. All right. So after the Boeing accident, what will happen to the actions be the stocks? Okay. So, Boeing's just Boeing's. What's the luck of Boeing? Boeing, it happened in China. This is a big deal. So for companies that are doing business in China, specifically like Boeing, so much of their sales comes from China that I would be fairly concerned. I would be fairly concerned because China has a tendency to, when something like that happens, they really go after you. I think, for example, Tesla, of course, it wasn't really much news. There was a bunch of other things going on in the world, but Tesla had some sort of thing that I think the Chinese government was kind of, you know, not really being honest with it, but they kind of forced Tesla to do some sort of like recall and stuff, and they're pretty like stranglehold about it. If there is a Chinese variation or competitor in China that they're trying to develop, usually what they do is they allow you to do business in China. They'll take your technology, and then when they have your technology, they're going to start to try to do things to destroy sentiment within domestic markets to the point where you know, they can over time just kick you out or destroy you in some capacity. Like when I say destroy with competition. Okay, so is Prosus spec position only a spec due to their 10-cent stake, or have you looked at all of their holdings and decided that they are also mainly spec for you? Yeah, no, it's mainly spec. Of course, the size, someone might dispute that it's a speculative position size. I mean, it's close to like 1% of the portfolio. In fact, let me tell you the exact percentage so I don't misquote it. Prosus is at 0.96% at the present moment. Okay, so they hold a lot of assets, and I think that it is mainly for Tencent because it's replacing Tencent within the portfolio. So it was a way to kind of take that tax loss, right, recognize it, and then buy back into the same entity, almost something that follows it at a better price. Okay, and then it should follow the asset, and again, the NAV discount could decline. What's my next video going to be about? It's either going to be about Mercado Libre, or I'm going to go a little bit more into some software businesses and then exit back into some more e-commerce retail related businesses. There's definitely one of those that's coming up is ASOS, because I have to redo ASOS. I did a video on ASOS a while back. Didn't like it at that price. It's fallen quite a bit since then. And when I say quite a bit, I think like 30%, nothing like 50, 80%, nothing like that. But, and then definitely I'm going to cover a company called Context Logic, also known as Wish, as a case study or an example as a company that cannot scale. So that's going to be more like a lesson video than anything, but those are all within the same theme that I'm kind of covering them all together as these e-commerce retail plays. That's why you had Shopify And then Best Buy might cover Target as well. Depends. I'm trying to cover all the requested ones. No one's actually requested Target, believe it or not. Okay, so after the morning, all right. Hi, Fabio. Can you look at the UK stock called Cineworld? Yep, I saw your comment on that. I think it was your comment. Maybe not. Maybe it wasn't your comment, but I'll definitely take a look at it. If it wasn't yours, I did get this request already. And yes, it does. On first glance, it does look like a cigar butt investment. And if they are able to survive, it looks like it would do good. All right. Shopify reported an enormous net unrealized loss. That's 82% of its net 2021 income. Why didn't they detail that line item in their Q report? You're asking, okay, why didn't they detail? What do you mean by they didn't detail? Like they didn't talk about it? They didn't show it? I can't answer that unless I understand exactly what you mean by that. Yeah, I can do that. Let me write that down. I know that's on the list, by the way. What I was planning on doing is doing this one, Markel, and Boston Omaha, kind of more in the same area. Baba go to the moon today. Yep, I did it. Wait, I didn't actually check really the stock market today, but I think I saw Baba. Yeah, Baba did well today, 11%. So you know what that means? Geniuses. I'm only 20% See, there you go. You have to be able to have fun in life, and Strawman definitely has fun in life. And then here we go, more rules. Okay, Kroger, my ogre. Are you making a request? I count that as a request, and we are gonna add Kroger. Well, actually, no, Kroger's already on the list. What am I saying? Kroger's on the list, and I'm gonna do that one with Ingalls Market, which is a position in my wife's portfolio, and Albertsons, which was a position until more recently in my wife's portfolio. Just go worried about fashion brands. Oh, that's about LVMH. Yeah. The thing is, LV has always managed to stay relevant. Exactly. And they do a great, no, but that's the thing. Like I'm more cautious about other companies. Just LVMH seems to just play everyone like a fiddle. Yeah, so these are the other competitors for those of you guys that don't know. But yes, all of them are very expensive. LVMH though is just wow. Like of all three of them, I'd take LVMH every day if they were selling at the same valuation, right? And assuming same growth. I don't know if I need to probably catch up. Oh my gosh, there's so many questions. But thank you guys. All right. Let me see where I'm going. Okay, YouTube finance, you'll be at the stables. Yeah, that should be definitely. All right, debt to equity ratio is too high in your opinion. You're not going to like this answer. Depends on the business. My friend. Nuances. All right, China was the first to ground the max, and it turned out they were right to do so. Yes, and that's what makes BP. I like Airbus more. I did a video on Airbus and BP, and I think I ended up concluding that I liked Airbus more. Okay, so they didn't explain it, and I saw your question. Invest for the future. Thoughts on Vale? I don't like it as much as some different plays like Rio Tinto and BHP. That's why they're not in there. Vale is also controlled by the Brazilian government in a large capacity. You have to deal with all that nonsense, and they're about to go through a political change because I think Lula's going to win. So, and that's not necessarily a good thing, but we're not getting into that. All right, so Shopify showed the amount but didn't explain it. I've seen a lot of valuations that try to ignore it but without explanation. We don't know if it'll recur. How did Shopify get away with knots? Okay, so if I remember correctly, I think I saw something where they were discussing it, and I think it was in the video. It might not have been that one. It was on the annual report. I'd have to take a look at the quarter. You know what? If we have time today, I'll pull it up live and we can go through it. If we have time today, then just remind me. But so I can actually see live what it is you're talking about. Because I think I saw something with an unrealized loss or unrealized gain. was one of those. No, I think it was an unrealized gain, and they subtracted it out in the statement of cash flows. But you're talking about an unrealized loss, which I did not see. Interesting. I think it would depend on what it is they're talking about. Yes, I love Markel. Markel is definitely Markel's a staple position in the portfolio at this rate. Well, the banking stocks, no, I have not. And the reason why is I was holding all the banks. I had a lot of questions regarding bank stocks because Citigroup's still in there. And every time someone sees Citigroup, they're like, but what about Wells Fargo? What about Bank of America? What about JP Morgan? And I always have to respond that, well, I love those ones. I just sold them all. They used to be in the portfolio. I liquidated those positions. They were all pandemic buys, right? So Bank of America, JP Morgan Chase, Wells Fargo, those were all purchases during the pandemic. And Citigroup was the only one that stayed. So that's why you only see Citigroup, right? I think, and Citigroup will always be cheaper, right? Because Citigroup produces a lower return on assets relative to the other banks. So always trade at a discount, and people don't understand that. So when they see that Citigroup trades at below book value, they're like, oh, it's cheap, because that's a traditional valuation for banks, not understanding that it should trade below book value because of the percentage that it returns on said assets, right? And they're just like, they are the worst performance-wise. That could change. That could change, though. So I just kept it for the speculation that the new CEO improves things, right? But as far as the banks, I prefer, my favorite bank is Bank of America. So I agree with Buffett on that, funnily enough. Okay, so Berkshire Hathaway to buy Y for $12 billion. Let me see that stock. I'm not familiar with this. Y stock. Oh, well, that is definitely. Oh, it's a railroad business. Okay, so or it's a railroad interest, a holding company for railroad interest. I'd have to take a look at it and figure that out. But if they're buying it out, which they are, definitely they saw something. And the thing is, they probably have some synergies that they could kind of incorporate. So to them, it is of a different value, and then that goes into like the acquirer's multiple and all that jazz. Okay, explaining what went into that line item that was so big, it was critical for a fair valuation. Okay, the thing is, if it's unrealized, it was an unrealized, right? Again, we'll take a look at it if we have time at the end. But definitely, what I'll do is I'll do like an update addendum to Shopify and take a specific look at it. But I'm going to be looking for an unrealized loss, right? Comment down below if it was an unrealized loss, and then I'll know and I'll keep an eye out for it. All right, what's my thesis in AGRD? Well, AGRD is, let's get into like line by line. But AGRD was a failed buyout by Lockheed Martin. All right, they are a desirable asset. They have control over 70% of, I think it's solid state rockets, which is missiles that we use in military. And so they are a desirable asset for a lot of businesses, especially the other defense contractors. They are an acquisition target in that respect. And we also know that they hold a lot of land in California with a tremendous amount of value, unrealizable value at the present moment. And it could be realized, and that value could vary. We estimate that it could be close to the current market cap or a decent chunk of the market cap. Sorry, not the exact value of the market cap, but a decent chunk of the market cap. So that's a lot of unrealized gains, not unrealized gains, sorry. Untapped potential is the proper word for it. So that's basically the gist of it, all right? Oh, yeah. Kroger was a good buy. The grocery stocks do have a lot of tremendous amount of pricing power when it comes to inflation. So, there it is. Yeah. That's what it's going to take. Definitely. No, it's just part of it. Rappers love Hennessy. Yeah, they do. They always have Hennessy. Would you buy a major? Would you do any major changes to your portfolio if the yield curve inverts? No, because I'm actually technically cash heavy, but I'm cash heavy for a variety of reasons. So for real estate and stuff like that. But I tend to look at it like I'm constantly deploying new capital as more money comes in, deploy more capital, get dividends, deploy capital. So I'm always moving money around in that capacity. Not really in the sense, the only move I made was I sold my REITs. And for the time being, it appears as though that was a good move. We could see that change. And, if I don't get back in, but there's a strategy change in REITs. Otherwise than that, there was the liquidity crunch that we kind of for now passed through, and we're entering a new time frame. But there's a lot of money re-entering the market, and we're seeing a little bit of not exuberance, because I think people are still kind of cautious. I think the overall vibe is people are still kind of cautious, but we need to see what people really think about this, or how they digest all this. I think everyone's kind of a little bit confused on this. Yeah, LVMH is indestructible. No, they are a beautiful business. And Spaceland, the interesting cat. Yeah, Brooklyn Stock Shop. I saw your comment, Spaceland, and I saw that you were trying to set up some sort of debate. But yeah, unfortunately, I don't. First of all, I'll say this: if he does agree to one, I'll let him determine what the topic is. But I don't know what we would debate about. I think I saw that some people would say, or some people have suggested that, and it'd be pretty funny, I guess. I don't know if you guys would even want to see that. All right, can you add Nokia to your possible review list? I've been holding this bag for a while now and would love to see how you would approach this company. Now, I mentioned this in the past. My brother is invested in Nokia through call options. And this is something he did in 2020. I remember we went on vacation together, and we were discussing Nokia, and he actually bought it right then and there on the vacation. So I'll have some good insights, I guess, on that, but definitely I'll add that here. Nokia. And okay. All right. So in what sectors would be good to look at to protect a portfolio during recession? Cop out in recession resistant sectors. I'm just kidding. So could you imagine if that was the answer? Recession resistant sectors. What sectors are good during a recession? Sectors that are good during recessions. No. Okay. In all seriousness, typically what is thought of as good during recession is sorry, I just laughed at a comment that just came in. That's so funny. All right, I'll highlight that comment because that's too funny. Typically, it's consumer staples, things that people don't, no matter what, can't live without. Also, good collateral is good during a recession. Well, it depends on what kind of recession. But again, if you're looking at just businesses, strictly businesses, consumer staples. So. But then you got to be careful when the people move on to a risk-on environment, because then money is going to leave those to be deployed elsewhere. So it's kind of like a risky bet. If you want to think about it like this, just buy assets that you like at good prices, and you're going to be fine. Whatever assets those are, and be honest with yourself whether or not those are good assets, and whether or not that you understand those assets enough to know that should they go down in price, in nominal price, that you understand what you own. And you're not going to panic, and you'll do fine. I'll come right back up to the top, but Brooklyn did not post in here. No, he did not. And so this is Strongman down here. He did not post in here, but yes, I had this request, and I don't know if you saw this guy too, but Spaceland was going to set up a debate. And yeah, and this is the comment that I found absolutely hilarious, and I thought it was funny. Plot twist: Fabio realizes that Brooklyn Stock Shop is objectively correct on everything. Probably. All right, so now going back here, because don't worry, I won't forget about you. Should Wish be an example of a company that can't scale? Their scaling problem was a result of Facebook changing the algorithm. They still have millions of users and are priced close to bankruptcy. Okay, I will explain that more in the video, but it's about their operations, not about their customer reach or anything like that. Simply put, I'll use a metaphor, and I'll go a little bit more into the metaphor, but oh, sorry, I was reading another comment about something, but simply put, we can start $100 million business. And I say this to Austin. I used to say this to him all the time. We can start a $100 million business with $200 million. Easy. So for example, we have a $200 million. We give everyone $2 if they give us $1. Now we have a $200 million business. So that's a metaphor that I will explain in greater detail how that relates to Wish when we get there. All right. But there are some deep problems with businesses like that. Okay. But that's a metaphor. Okay, so it was an unrealized gain. I'm trying to fit that in. Okay. It was an unrealized. I know. The chat has a 200 character limit. I know. But of course, you'd have me reading here paragraphs like blah, 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 blah. That'd be crazy. So, you see, we have a lot of CPAs in the chat presently. So we have, this is a good place to even ask that, because if not only you'll have my opinion, but you could have different opinions. I have to take a look at it. But right now, since I'm doing the live stream, these people, they can be taking a look at it right now and answering your question. But if it was an unrealized gain, okay, so you're saying that they did not address it. But the thing is, they might have actually addressed that in the cash flows per se, as in they removed it, because they would have securitized assets, and those assets have changing prices, right? Depending on what the market's willing to pay for it. And when they have a gain on that, if they didn't sell it, then there's no real gain to be had. And Berkshire Hathaway's had this problem a lot. Warren Buffett's talked about it. He's been saying, like, we didn't actually make that money. It looks like, Berkshire Hathaway has a PE of 5 or PE of 3. Do they really have a PE of 3 or 5? No, it's because you're taking into account unrealized gains because their stocks went up or whatever. So, as an example. And so they have to remove that. So I think they accounted for that if it was a gain, right? Because I didn't see a loss. I didn't see an unrealized loss, but I did see an unrealized gain. And I think I addressed that briefly in the video. Tell me if I didn't, because I have to rewatch the Shopify video I did. I know I made the video and it's clearly me in the video, but I don't remember if I addressed it specifically. Okay, so here's another question. If they fix scaling, they are in a much better position than a new starting company. High risk, high reward. Oh, absolutely. They could fix the scaling issue. But the thing is, for now, I'm seeing a negative trend in terms of scale. And that was my problem. My main problem was seeing that there is, for the time being, an issue on scale. And at the time, this is anecdotal evidence, or not anecdotal evidence. This is an anecdotal story. There was a mutual friend of ours that was pushing this stock to me, and I said that, and I think it was around 13-ish something dollars. And I said to them, this is showing that it is not scaling. And this person was fairly new to the market. And it was actually funny because they were a Wall Street Bets guy. They made a lot of money through Wall Street Bets. But then it was, I think, keeping the money. I don't know how much money they have right now, but aside from the point, they liked Wish stock for, I don't know what pushed them into Wish, but they also loved Tattooed Chef and other stocks like that. So I can assume that it was a certain group of creators. But yeah, I'll get into it more in detail. But obviously, of course, you're absolutely right thing to invest. If they can fix it, we're looking at a different company at that point. And if you think that they're capable of doing that, it's a high risk, high reward bet, right? They just aren't showing that right now. All right. I don't know if it's smart to apply non-operating income in the valuation. Personally, I only look at EBIT growth and EBIT margin since that relates to the core business. This is another perspective. Julius is absolutely right in this perspective because it's not actually something that is repeatable each and every time. You can't just assume that unrealized gains are going to keep occurring over and over and over again, right? Sure, they could, but the thing is, they're not really gains until you realize them, right? So it's not actually something there. Okay, so yeah I can't say that because he might end up debating me, and I don't want to have some like negative statements. Well, no, you know what, he actually deserves it, as my wife would remind me, because he has stated some bad things, definitely some bad things. He's shown himself to be a highly very colorful mouth, but yeah, to be overt and straightforward, yeah, he's kind of a dick. Okay. No, I'm not drinking. I was having coffee, and yes, it is 8:30 p.m. and I'm having coffee because after this I have more stuff to do. So yes, what is that? Leafs and tea. Okay. All right. So, yeah, Zaster, let me know if I actually already covered that, because I think I did. I think I did cover that they had the unrealized gains that they did remove in the statement of cash flows. Because when we look at the cash flow, since it's not an actual cash recognition, right? It's not something that they actually got in the bank. Oh, okay. Yeah, he's drawing insane. He's crossing some crazy lines here. Let's just say that one, that's not true. Even my wife, if Strongman, if you're listening, my wife says your kids are very cute and beautiful. And two, uh, who's he to talk? Who is he to talk? I don't understand that. That is like I was thinking about just creating a really fun meme with him. He reminds me of some characters that I think you guys might like to see side by side. Uh, but anyways, enough about. Oh yeah. He actually does. He does. But there's some other characters. Like there's some other characters that he reminds me of. He reminds me of that Harkonnen character from Dune as one of them. The the guy who like floats and stuff. Um, oh my gosh, it would. Yeah, 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 that would be funny. That would be funny. Teaching about him in schools. Yeah, that would be pretty funny. But what are the odds? I don't think that's a probability. Um, by the way, I just want to also tell you guys that I want you guys to know now ahead of time. Starting in September, there will be a lot of restrictions on what kind of stocks I'll actually be able to talk about, which is unfortunate. I just want to let you guys know now. I'm telling you guys now in this live stream. There's only 27 of you who are listening to that. But for the time being, I have no restrictions. I just know that in September there's going to be some decent restrictions placed on me, and I just want to let you guys know now. And I'll try to get, of course, through all your requests before then, because what I do now doesn't affect what I do then. So, again, if we're looking at any changes, by the way, I hope you guys saw that I did sell Foot Locker, right? Yeah, so Foot Locker was a fun sale. What is your source for inspiration for finding stocks? When you get tired of seeing your watch list never getting to your entering price, I'm always looking for them. The thing is, I'm always looking for them. So I look at a stock and then I look at their competitors and then I just get introduced. And eventually, you'll find that you become sort of like, what's the best word for it? Like a telephone book of stocks. Eventually, you'll have so many stocks in your head that you'll just be able to go on your computer and just Google a bunch of tickers, see what they're trading at, do your evaluation, see if it's at a good price, and then you can zip through a bunch of companies. You'll get to that point. Everyone will get to that point if they get into this long enough, and that's basically how we do it. Some people just go, they go like the telephone book method. They go A to Z. They just see how many they do. This one's actually already on the list, but since it's being requested more now, I'll try to get that out quicker rather than later. Playboy. You guys are having so much fun talking about Brooklyn. Oh my gosh, you JP and Julius down there just going back and forth. Isn't it better to ignore people like him? Talking about his appearance just lowers you to his level. That I would agree. I would agree with that. And thank you for that perspective. I shall refrain. Like I said, I do take your criticisms very seriously. Like I did receive criticism in the past saying that I should allow the user or the viewer to have their own opinions or judgments about the quality of someone's opinions, right? Again, what I'll do is it like depends, Tor. So like I would normally absolutely not do that. It's simply because Brooklyn kind of crossed some lines. But you're right, doesn't mean that we have to cross those same lines. Okay. So I sympathize with your point. I would even argue to say that you are in this sense correct. For myself, I shouldn't do that. Julius Caesar and JP, absolutely, because they're viewers of this channel, and they have every right within them to do it, and there's actually nothing wrong with that, right? Squad attack. But yes, so I say those restrictions should actually, yes, they should apply to me. I should not do that. All right. But thank you. You see, this is what I want, guys. You should never ever be afraid to disagree with me, call me out, and stuff like that, no matter whatever size this channel ever gets to. So please do that. You're always welcome here. Heck, we had BP that was on here, but I haven't heard from BP in a while. BP was stating stuff that was more geared towards the negative side, but again, everyone is welcome on this channel, and I hope that kind of shows that, right? Just if you can say whatever. I have very thick skin. I'm very I'm very okay with whatever you guys say. And I'm not saying that, Torre, you're saying anything that affects someone with non-thick skin. I'm just saying, I'm very happy for your comment here. Okay, thank you. Yeah. So, sorry, I accidentally clicked the back button, so I was out for a second. Yeah. So one thing I'd have to see, Zastar, what specifically makes you uncomfortable about it? I want to know. Maybe we can kind of address that, because again, we do have a lot of CPAs in the chat here, and they'd probably be able to shed some light on this, because I'm curious as to what makes it uncomfortable for you, in your opinion. You guys are too funny. You see, these two guys are going back and forth. Okay, so can you put PaySafe on your video list? Yes, it is, because I saw your request, and so it's already is. But when I write it down, I'm gonna put a little bit more stress, and I might count that as kind of like an e-commerce sense, because I did cover a firm, and so that seems like a natural progression. Which, by the way, I'll say this about PaySafe. PaySafe is a little bit different. Not a little bit. It's quite a bit different. I akin it more to like kind of like a Stripe player. And I discussed, again, the risks with PayPal. I have to do another PayPal video. I won't even get to it, and it might actually rise before I actually get to it. But long story short, PayPal has come down since the videos I made about PayPal, and now it is at a more respectable price. Now, here's the thing about PayPal. If liquidity kind of re-enters the market, we have the opposite of a liquidity crunch, liquidity expansion. PayPal will very much benefit from that in terms of stock price action. Of course, at the current price, a lot of the assumptions are relatively, somewhat priced in. But yes, like I think now it was a better price than before, and I actually would say, that it's an interesting speculation at the present moment. Again, if we see a lot of liquidity return to the market, I do suspect that PayPal, and I'll say this here now, live, that PayPal would be a strong beneficiary of that. As far as the business goes, we have a lot of competitors coming in, and you're saying PaySafe. PaySafe is in some capacity a direct competitor to PayPal. This is, I think, is the UK based company. So yes. Good question. Any recommendations on how to learn how to value a company? Currently reading through Valuation by McKinsey and Company. It's a bit of a slog at times. Yeah, I suspect they're, those guys would write something like that. But, there's so many different variations on how to value a company. There's not one way. Everyone's going to find their own flavor. Hopefully my content helps, provide a positive impact in so that you figure that out. But, there's a lot of creators who are talking about their own methods. You can learn a little bit from them. Some I say have like very questionable methods. Let's not kid ourselves. But okay, Patrick, I'll add that. But so I'll address that in a second. But there's also plenty of books, right? There's so many different variations in how someone will look at a business. Like, so for example, I don't agree with really looking at EBITDA, right, for various reasons. But some people agree with that. And I think EBITDA has to be used in a specific kind of context, right? And I do use it in a specific kind of context, privately held businesses and the like, but not so much in when I'm looking at individual stocks. So there's so much to. I mean, that's such a broad topic. I hope I answer that in an interesting way. But yes, let me know if I answered your question. If I didn't, hold me to the fire and make me answer it. Oh, I am okay. So I didn't mean to, and this is what I'm talking about, Patrick. If I ever skip over a question, I want you guys to feel that you guys can re-ask the question, because it is within your right. That is what I'm telling you guys that these live streams are for. These live streams are for you guys to ask me any type of question, challenging, non-challenging, stuff like that. So BP, or sorry, not BP, BB. All right. So this is Blackberry, right? Let me make sure it's Blackberry, because I think it is Blackberry. It is Blackberry. Okay, so Blackberry is on the rise. Okay, more recently had a nice day today, about 5%, 20% in the last 5 days. Interesting. This is, I know, a cybersecurity play, and that's mainly how Blackberry has repositioned itself. The thing is, there's so much competition in this space. This is a $4 billion company. I'd have to do an analysis on Blackberry, but yes, it can be added. There's nothing stopping that from being added to the list, and that will go into the cybersecurity bucket. When I cover those, I'll add that in there. Okay. Oh, a lot. I mean, if Venmo is being added to Amazon, absolutely, because so many people use Venmo, right? If you don't use PayPal per se, you might be using Venmo, and then in that instance, you're still in the PayPal ecosystem. So I can review Jimmy from Learn to Invest. I shall add that. Okay, Jimmy. So now we have I think we have three creators that I've been asked to review. Rob from The Popular Investor, Jimmy, Joseph Carlson. Okay, those are the three that I think. Let me actually quickly make sure, because I have them listed here. I think there was actually one more, and I'll just add this here to the list on the sheet. Average Joe Investing. That was the other one, actually. So Jimmy. Okay, so Jimmy's added to the list. So the one that's coming soon is Joseph Carlson, because that one was asked a while ago, and then the others will come after. I guess this was the repeated question, just in a different way, because you typo. Keeping the money in my wallet. Caterpillar or Komatsu, or keep the money in my wallet? Wallet. Is there going to be a lot of infrastructure spending? That's a question I haven't looked into that, but yeah. I am the patient investor. Okay, sure. Why not? Why not? Let's go for it. The patient investor. I don't want to like accidentally start beef with people when I say like, "Oh, your portfolio sucks." Your portfolio sucks. Oh yeah. So I'll get to that comment, because that's an interesting comment. I haven't thought about that. That's a really good way of doing that. All right. So invest for your future. He has a mega boomer portfolio, in my opinion. Okay. Context. Who has it? Oh, Jimmy. Jimmy has a mega boomer. Okay. And he added Google. He has my position, so like I can't talk bad about him. So the patient investors on the list. What about Ape Father? We all know Ape Father just owns AMC, guys. Well, he owns a gold mining company. Remember, he owns a gold mining company now. Okay, so any tips for doing research on stocks? Because sometimes I feel like I miss certain things or risks. Yeah, that's the learned skill. You can never know too much about the businesses that you own, because you're a business owner. You should know everything, if possible, about a business. That's the unfortunate thing, is that we can't know everything because we're not managing the business. But that would be ideal, to know exactly what's going on under the business. So you can never do too much research. Some areas of focus, like for example, you go through the typical, like, look at the financial statements. That's the basics. And then you look at what exactly that they do sector analysis, and look at what it is that they're competing against. Who are their competitors? Are their competitors at a better footing? Then look at management, right? Is management better? That's important too. But yeah. Does he have a public portfolio that I could even review? So this is genius. This is what I was laughing at. I saw this and I was like, oh my gosh, this has to happen. This has to be created. I will dedicate myself to finding a good scene and absolutely doing this. All right. Really? Oh, I don't really watch Joseph. But that's an interesting perspective. I'll see, like, when I'm doing a video on him, what I'll do is I'll watch some videos of him to kind of get a feel for what he says and stuff. But yeah. Makes sense. I picked up more from you, and investing sucks than the valuation book, but really only comfortable with vanilla companies. Only buy what you're comfortable with. only buy assets that you would otherwise be okay with owning. That's very important. You never, ever, ever want to own something that you are not comfortable with owning and you're only invested in because, someone else is doing it or something like that. That is definitely how you're asking to make mistakes. So if you're comfortable with, I don't know what vanilla companies are, but if you're comfortable with vanilla companies and you find them at good prices, there's nothing wrong with that. There's nothing wrong with that. In fact, you probably can do pretty good still. I don't know what vanilla companies means, but like I assume that just means like blue chips. Okay, I guess that's a previous comment. Here you can read this. This is a good one. This is actually to Zarstar, if you're still here. There you go. Yeah, no, that's the thing. Eventually, though, I am planning on having that. Like, I would have eventually a stated live opinion on the internet forever on almost every single company. Of course, some of them won't be up to date, and that's the problem because it needs to be up to date. But it will be like a track record that I will accumulate over time, over long periods of time. You're bringing in these questions. All right. So, any thoughts on gold and silver? I have gold and silver for fun, but like physical. I have physical gold and silver. I collect. The collection started from my grandparents, right? My grandfather, from my father's side, fought in World War II in Europe, and he was a European, not an American, by the way. But he started the collections of silver and gold coins and variations of them, such as, some rarities, some not so rare, some are just silver and the value is the metal. But I have continued the collection, and I do stack a little bit. I'm not stacking for the end of the world. That's not what I'm doing. It's simply a passion, right? It's like how someone buys a watch and they like the watch, and the watch is worth a car, but or in some cases a house. But I assume your question is geared towards more as an inflation hedge. It could be an inflation hedge, but it's not something that will make someone rich. Even those investors see it more as something that holds value over time, not something that necessarily grows in value over time. Okay. This is geared towards someone else. How do you find the time for all these videos and stock analysis? Are you Doctor Who? No, I just don't sleep. That's the answer. So lots of coffee, very little sleep, and and also for the time being, my work does allow it. So review Stockmo. Oh gosh, I know this guy, Stockmo. I only know him because of I speak to Strongman Jay Nagy and Index Investing with Cole, and they talk about Stockmo. So that's the only reason why I know Stockmo. Wasn't he the guy that was doing Workhorse and all that and said he wouldn't sell? I think I saw an Everything Money video actually on that. Okay, so you see, then there goes the camera, not focusing in. I got to get a DSLR. That's it. I just got to drop the money. Okay, so any suggestions as I am building a dividend portfolio? Okay, so a dividend portfolio. Okay, the concept, the theory behind building a dividend stock portfolio is, of course, think about your tax advantage accounts first. Then, and only then, and actually that depends, because it depends on when you want to access the money. If you're doing like trying to retire early and live off dividends earlier, think about that before you lock up your money, because you're going to pay extra money. But put that into your strategy, or think about that. But the theory behind dividend and stock investing is that you're never going to sell. You're only going to have the principal invested, and you're going to generate growing dividends over time. You reinvest the dividends as long as you can, and of course, as long as you pay your taxes. But yes, focus mainly on the sustainability of the dividend. Focus mainly on that. And depending on your age, focus on the prospects of the business. So don't ignore that. Really don't ignore that. In fact, you should try to think of it still as the same as any kind of other investment. But you have the added flavor of that you want, or you're focusing on businesses that produce dividends. And you will find plenty of great businesses that do pay dividends. But yeah, focus on the sustainability. It should be your most important prerogative. You don't want to hold something like an AT&T. Okay. And do not be a value trapper. Like if you're trying to build a dividend growth portfolio, the idea is you build something with a yield on cost effect, so that later down the line, the yield on what you put in is much greater and you end up with more. And you're trying to build like generational wealth in that capacity. And of course, you should try to learn, don't get into it before you feel comfortable and you know what you're doing. But on a academic basis, try to learn how you might be able to utilize call options, right? In terms of selling calls on positions. You must do it well. You must execute well. So that's the caveat, but try to learn. And then that's something that could give you more optionality as well with a dividend stock portfolio in theory, or just, don't do it. You'll still do fine. All right. I could do Facebook updates, but the point is I do what you guys want, right? And I do your requests. And sometimes I'll talk about my stocks, but I'm not trying to hype up my stocks. I don't really care if you guys buy them or not. I prefer that, if you buy them, you buy them because you want them. But yeah, if you guys notice, I don't really do videos on the stocks in the portfolio. It's just there, and I'll do a portfolio update, but I don't really go, oh, look what I bought this. Hey, remember I bought it. And then I go in the next video, hi guys, remember I bought Facebook, and then stuff like that. I won't really do that, but I guess I could. I guess it probably would get me more views. The Facebook videos get more views than these random, stock videos. They get a lot more views. I think the Facebook video got like over 1,000 views, and but the point of this channel is not for the views. Are the restrictions on you talking about stocks in December permanent? No, not permanent for my life. I'm gonna do this channel for hopefully years. So no, but it will be for a couple years at least. I'm a doomsday stacker. Absolutely. The world is going to end. By the way, guys, this stream will end in 4 minutes. Just letting you guys know. So I'll try to wrap up these questions. Caesar, at least we are getting a small break from Baba and Tesla. Was he only? Oh, that's referring to the Everything Money, Paul. Okay. Well, he talks about Baba and Tesla only, there is a guy called Hamish Hodder who is very strict value investor. One of the first I watched. He is so strict. He is only invested in Thor and like 40% cash. He is very smart. Well, because he's invested in Thor and I'm invested in Thor, I like him. I'm just kidding. All right. So yeah, that's what I'll say about that. But I'll take a look at Hamish. I already know about Hamish, so it's not like I don't know about Hamish. But I'll talk about Hamish. I'll talk about Hamish here. I think he's very intelligent and he's going to do very well. He has some differing views on very small things, but no, I think he's one of those that will do well over time. He definitely has the spark and the knack for investing. I'll say that. Okay. But sort of feels like he's too strict for his own good. Yeah. The thing is, though, if you are strict and you're going to be very confident in what you own, you'll be fine. I think he made a mistake in selling Facebook when he did. Hindsight right now, for the time being, he has. It's showing that he has made a mistake. But, we're not going to judge his actions based on short-term price action, right? But for the time being, I think he will show that he was incorrect. If he should have sold, he should have sold when it was a lot higher. Obviously in hindsight, but when it was at 300, when I wouldn't have bought it because I think it's overvalued above 300. I think that was a good time, an exit point, right? Okay, so AMD will be tomorrow probably. Oh, you're talking about Everything Money. Any opinion about structured bonds? The ones say they pay like 20% of Tesla price is 800. No opinion on structured bonds. Not really my forte. So I can't really provide you an accurate opinion on that. I'm gonna email Eric to see if he wants to come on this channel and do kind of like a discussion. Yeah, because he had me on his channel, and I'm trying to break the ice with these live streams. The first couple times, talk to you guys and stuff like that. Just me, and then I'm going to bring other people on. And this is an open invitation to, if any of the other creators are watching, because they host me. So obviously they can come on this channel. But I'm going to invite Eric onto this channel, probably this or next Friday. And we'll see if he comes on. But I'm sure he'll say yes. Yeah, that yield on cost. So like, when you take into account what you put into the money, what money you put in, like the capital, what dividend yield are you making on that amount is the yield on cost. That's what I mean. Okay. And it seems like Everything Money repeats videos on the same 5 stocks every 2 weeks. They just run it through the 8 pillars over and over again. Well, I'll say this, and I heard this before. It's not my opinion. I'm just repeating it. Everything Money's 8 pillars is a screener. That's a screener, and their model is interesting. I'll say the least. But yes, yeah. So like, that's what I'll say for now. In the interest of time, I'll answer these other questions down here. Of late, Jay Nagy is mimicking Everything Money's Paul. Did you notice it, Fabio? No, I haven't noticed it. Interesting to note that opinion. I would like to know exactly why. Is it the demeanor or something like that? But yeah, let me know. Hey, Alex, anytime. Thank you for watching the stream, and I hope you enjoyed it, and I hope it provided value to you. Well, Strongman, no, you're actually more than welcome to come on the live stream. You just let me know, and then you're on here. You've been a gracious host for me for a long time on your channel, so you just say the word, and you're on here. That's an open invitation. That's like we're saying, like, yes, you are invited. If you want to come on this Friday, the spot's yours. We can talk about anything you want. And I'm sure that everyone here, of course, they know you as well. So, okay. Want to cover this one. I found selling OTMs, puts OTMs. By the way, OTM means out of the money for everyone. Gets a better premium than selling calls. And it's safer since you already have a built-in margin of safety. Basically, you get a dividend. Yes, exactly. So it depends on the business, depends on the premiums. Everything depends. But yes, you do. But I'm saying like selling calls on positions you currently have. And again, it just depends on the stock that you're talking about. What is the options market for that stock? Everything I say is like, it really just depends on the specific circumstances. Like I wouldn't say sell calls right now on everything out of the money. No. Like some have better prospects to them in terms of a risk reward, because the ideal for selling calls on a position is you keep your position and you get the premium. It's great. Yeah, I know. Yeah, I've seen that too. And telling a random teach executive that he was right. Yeah. I saw that too. Because I did watch a lot of the videos when I did the video, or right before I did the video on Paul's portfolio. Thing is, he played with the soap. I learned that mistake too. Not that I don't make that mistake either. I play with the soap. You play with the soap, you lose out on a lot of returns oftentimes. We'll see if I'm wrong about ConocoPhillips. Maybe I'm playing with the soap. And by the way, where that comes from is a metaphor. Is when you have a bar of soap, and then when you use the bar of soap, it gets smaller and smaller and smaller. So it's a metaphor to saying your returns get smaller and smaller and smaller the more you play with it, the more you use it. Okay. Everything Money is actually copying Jay Nagy. Yeah. Yeah, because I don't know what rate of return each of them use really. Thank you. I have to ask this critical DD question on you as a finance YouTuber. Pineapple pizza, yay or nay? Crucify me. I would eat pineapple on a pizza. I used to be completely opposed to it. I used to think it was a crime. And then I had it. A very close friend of mine told me, you have to try it. And then I'm an open-minded person. I changed my mind on it. It's not my go-to, but I would eat it. Hey, he's a working man. He has a job, right? He's one of those losers that has a job, guys. Come on. I'm kidding. That's an inside. Well, that's not even an inside joke. That's just a joke. Yeah, okay. Well, no one wants to drop the soap, Martin. No one wants to drop the soap, but that is a different metaphor. But I like it. Touche. All right, guys. Portrait has a J on his wall. All right. On that note, guys, I'm going to close off the stream here. So I finished off a little bit after the 2-hour mark, but wanted to. Oh, sorry. No, there's one more. I wanted to show this. They used to be okay. And I saw the word Guinness. Pineapple on pizza is great. Guinness from a glass, not so much. Is that really, you don't like Guinness on a glass? I mean, I'll drink Guinness both, but okay. I'll see that. All right, guys. Thank you guys so much for joining me on this live stream. Great questions again. Love hanging out with you guys. And I'll see you guys on the next video or live stream, depending on what you guys come for. All right, guys. I'll see you.